If crypto is the new financial frontier, CASPs are the gatekeepers deciding who gets real scale, trust, and licenses. In the next few minutes, you'll see how MiCA defines these players and why getting this category right can make or break your EU strategy. For years, crypto rewarded speed over structure. MiCA signals a pivot. Brussels isn't regulating lines of code, it's regulating business behavior. The real question is whether you can turn that shift into an advantage. A core MiCA question is whether you're just publishing code or effectively running a financial institution. The moment your business holds customer keys, matches orders, or routes funds, regulators stop seeing pure tech and start seeing a CASP. The leadership takeaway. If your model touches customer value in a meaningful way, you should assume you also carry regulatory liability. Think of Nova Labs as a timeline showing how good UX slowly turns into a regulated business. Version 1 is just code. Pure tooling, almost no licensing risk. Add a hosted wallet, and suddenly you're holding client assets like a custodian did. Add a simple swap button, and you're effectively running an exchange. The key lesson: every small feature should trigger a licensing and MiCA impact check. MiCA treats crypto services like a menu, organized by risk. At the high-risk end, you find trading platforms and exchange services where client money moves fast and failures can cascade. Medium-risk services focus on safekeeping and transfers. Advisory-type activities are still regulated, but with lighter prudential impact. Your business model may sit in more than one bucket at the same time. Now meet Alex, the marketplace operator. Think of Alex as running the crypto equivalent of a stock exchange. They decide who's allowed to trade, run due diligence checks, monitor the platform for manipulation, and make prices visible, so users and regulators can actually trust what's happening. Next is B, your vault keeper. She holds customers' crypto the way a bank holds safe deposit boxes. Under MiCA, that role is heavily protected. Client assets must be segregated from the firm's own funds, and if those assets are lost because of a hack, the custodian is on the hook. Then there's Carlos, your classic financial advisor in crypto form. His job is to sit between clients and markets, turning vague intentions into concrete trades. Because clients rely on his judgment, regulators load him with duties. Get the best overall deal, only recommend products people actually understand, and avoid conflicts like payment for order flow that could skew his decisions. MiCA's price of admission rests on 3 pillars. First, governance. Real decision makers inside the EU, not letterbox companies run from elsewhere. Second, capital. Regulators expect you to keep meaningful skin in the game, with minimum own funds or about a quarter of fixed overheads. Third, resilience. You must survive shocks, with strong IT security and alignment with DORA-style operational rules. MiCA also treats CASPs as the market's early warning system. You're expected to spot classic abuses in crypto form: insider dealing, wash trading, and pump and dump schemes. That means having tools and people to monitor activity, recognize red flags, and file formal suspicious transaction reports when something looks off. The regulation doesn't stop at financial risk. MiCA also pushes crypto projects to be transparent about their environmental footprint. That means public disclosures on your website about how your technology affects climate, especially the energy mix of your consensus mechanism, like proof of work versus proof of stake. EU passporting is MiCA's big strategic prize. Get authorized once in one member state, and you can legally serve the entire EU market. That turns compliance from a sunk cost into distribution infrastructure. Smoother fundraising, easier bank relationships, and scalable growth without constantly renegotiating licenses. MiCA is not some distant future problem. From full application, existing businesses get a limited grace period, then the door effectively slams shut. During that window, you're expected to move from operating under old rules to properly licensed CASP or issuer. Because authorization can easily take 6 to 12 months, waiting even a year can leave you exposed, scrambling, and potentially forced to exit the EU market. So tomorrow, sit down with your team and answer 4 questions. First, are we really just tech, or are we acting as a CASP? Second, if we are, Do we actually meet the capital and governance expectations? Third, who is our credible, locally resident director? And finally, what's our timeline for speaking with our regulator instead of waiting for their letter? MiCA turns crypto from a side project into part of the financial system. Leaders who lean in now can shape products, governance, and partnerships around this new blueprint. Use compliance as a design constraint, not a break. Build the shop, then own the market.